Hey YouTubers, thank you for tuning into another video with me. If you are a subscriber, welcome back. If you are a newcomer, welcome. So today I've got PCP versus leasing versus hire purchase for a new car in the UK. So if you clicked on the video, you're obviously looking at purchasing a new car on finance and you have no idea which product is best, and you've probably heard from some friends and family and you've read a bit online and you're probably thinking, which one is best for me? So I actually had this conversation with some friends. I thought what I'd do for today's video is actually summarize it and literally put that information out there for you to have a look at and for you to digest before you make that decision. So let's buckle up and get started. That joke's just come to me way too easily. PCP versus leasing versus hire purchase for a new car in the UK. Let's get started. Got lots to go through. If you haven't done so already, hit the like button, hit the subscribe button, hit the notification bell, and that just helps the video and myself in the YouTube algorithm so more people can see these money saving ideas, tips, technology, whatever I'm doing, definitions. So it's a good idea just to give you a brief overview of what each product is. PCP is a finance product to help you get a car, but it's not like a normal personal loan because you don't end up paying the full amount unless you want to, and that's where the options come in. So you're literally agreeing to finance part of the car and you have equity as a result of that part payment. But what you also have is three options when you come to the end of that term. You have a balloon or an optional payment that you agree right at the start to pay for the remainder of the car that you haven't paid for initially. You can part exec your car, so you can trade it in and use the equity that you built up to purchase a new car and do the whole thing all over again, or you can simply just hand the car back and that'll be the end of your contract. So you've got a bit of flexibility built in here. It's slightly complicated because of the whole flexibility, but the whole thing about it is that it gives you options and you're only paying for part of the car. Leasing is so much more simpler, also known as personal contract hire, you may see it down as, and you're essentially just hiring the car from new for a set term. So you put your deposit down over a set amount of months and you hand the car back at the end. So much more simpler. Hire purchase functions very similar to a car loan. You're effectively loaning or using finance against the whole amount, or if you've got a deposit, you put that down and you're paying part of it, but effectively you are paying for the full car. PCP, the advantages. So I'm going for the advantages and disadvantages of all the products. Greater flexibility throughout your contract. So depending on how much equity you build in, you could effectively swap and get a new car, maybe halfway through your term or 3/4. Obviously, you're not going to do that early on because you won't have enough equity built in. But depending on what the value of your car is and the equity that you've got within it, then you could swap and change your car throughout that period. So you've got a bit of flexibility. You don't have to wait to the end. Like leasing, your only option is to wait and see your contract out. You can gain equity, that builds on that first one. You have a value and you have an interest in that car. You don't own the full interest in the car because obviously you've not purchased the whole lot, but you do have a part interest within the car. Warranty. So when you purchase the car from new, you will have a manufacturer's warranty. When you do select the term for your PCP, I would probably say try get it in line with the warranty, depending on how long you want it for. But if it's, say, for example, a 3-year warranty, if you do go for 4 years, you have to consider that you will have a year where if there is a mechanical failure, you could have to foot the cost for that. Whereas if you chose 3 years, then you'd be covered from sort of all those mechanical failures because that would be covered in the warranty. But though if you do go for a different car, different manufacturers do offer different warranties on different cars. It may be that if you need it for 4 years, that new car and that by that manufacturer is covered up to those 4 years. So just take that into consideration when you do get your quotes. It's easier to conclude or seek financial help. So with PCP, there is usually a clause in there that covers that. An example could be when you pay 50% of your repayments. If you do hit financial difficulty at that point, there may be an option for you to trade that car back in and not have to pay for the remainder of the term. But if you do that, there's a chance it could impact your credit history. So my advice for you is literally before you go ahead with anything, any sort of PCP contract, is just ask the dealer or the manufacturer, whoever's doing your finance, what is in place for sort of financial difficulties, what the options are. So just cover that off. So disadvantages. PCP actually turns out to be more expensive on a monthly basis than leasing. And without getting full techie on you, it was to do with some sort of legal case in Mercedes and that. Long story, you don't need to know about it, but yeah, it is more expensive. And I have an example that will show you why it's more expensive on a monthly basis. Liable for vehicle exercise duty. So if you wonder what that is, it's just road tax, or what it's commonly known as. So you have to pay that as normal. There's no sort of, not included in the payment. You will be expected to cover wear and tear costs. So if you burn out your tyres, you're keening your acceleration, etc., you're going to have to pay for that. That's not covered in the manufacturer's warranty. You have to pay for that. It's just down as fair wear and tear. Because you have an equity value within the car, cars are depreciating assets, therefore your car is not worth what it was when you've driven it off the forecourt. So over time, it's not going to be worth what it once was, and over the term of your finance period, your car will go down in value generally. Excess mileage charge applies. So when you do actually purchase the car, you agree a set amount of mileage. With that set amount of mileage, if you go over it, you normally pay X amount of pennies per mile you go over. So it might be 10p a mile, it might be 25p, that you all charge different amounts, but you have to take that into consideration when you go ahead and you go through one of these contracts. Leasing or private contract hire, as you may see it commonly referred as. It's often cheaper monthly payment versus PCP, and it generally does include the vehicle exercise duty for the term. So you don't have to pay for that separately. It is included within the monthly payment in this case, so you don't have to pay that road tax separately like you would do in a PCP contract. And the monthly repayments are cheaper. You can include a maintenance package on top for total peace of mind, and it's normally an optional payment, and that will generally cover sort of servicing costs, tyres, that sort of thing. The maintenance package is different per manufacturer or dealer. So just cross-reference if you are comparing quotes between different dealerships as to what is included in that maintenance package, because you might find that they do charge differently for each maintenance package, but that is totally optional if you want that maintenance package in the first place. Depreciation, because you don't own any equity in the value, you don't have to worry about depreciation. Warranty, again, if there are any unfortunate mechanical failures, should be covered under the manufacturer's warranty. Disadvantages. So it's not as flexible as PCP, and especially at the end of the term, you've not got three options. The only option you've got, hand it back in. That's all you've got. You have limited options if you hit financial difficulties. Generally, this is down to the leasing company's discretion, and it may be that someone can take your lease on. Other than that, there's normally very limited options when it comes to that. Again, exactly like PCP, before you get into one of these contracts, ask them, get them to explain what will happen if you do hit financial difficulty. Let them direct you as to what they could do for you in that situation. As I mentioned before, you will not gain equity in a lease. That's not one of your sort of issues where it depreciates or whether it gains. But obviously, if you had a PCP and your car gained in value, you're not going to have that gain because you're hired the car, you don't have any interest in the car. You will not be expected to cover wear and tear costs. So if you do, again, use that example of bending your tyres, you will have to pay for it. Excess mileage charge applies exactly like PCP. You agree the mileage that you're going to do per annum, and if you go over it, you pay that excess mileage charge. Hire purchase, car loan advantages. So there's no mileage limits or excess mileage charges. You don't agree a mileage limit because you're literally financing the whole car. There's no issues there. You just literally, as long as you pay the cost via your finance, then the car's yours. No mileage issues to worry about. You do gain equity because obviously that whole car will be yours at the end of the term, and you're looking to do that straight from the outset, and you will own the car once you make the final payment. Warranty will cover any unfortunate mechanical failures, obviously until that ends. When that ends, you're exposed to that mechanical failure aspect and you'll be covering then costs. Disadvantages, monthly costs are more expensive than both PCP and leasing, and that's just because you're financing more of the car compared to the other two. You're liable for vehicle exercise duty, aka road tax, exactly like PCP, so you have to pay that separately. It's not included in the monthly payments. You are expected to cover wear and tear costs, the whole tyre brakes situation. You know, if you use them up, you're going to have to pay for new ones yourself. Depreciation can impact your future options. So if you decide that you want to keep the car for 20 years, for example, your car's not going to be worth the same as that you've driven it off the forecourt, as it's going to be worth significantly less over a period of 20 years. You can pay more in interest payments, and that's the reason why I'm saying that is if you've got the same amount of interest as you have in PCP compared to what you've got in hire purchase. If you're paying the same amount, obviously you're financing a bigger part, therefore if it's over the same term as well, you're going to pay more in interest. Not always the case, but it is a situation that could occur. So how do you get a cheaper quote? Now, quotations mainly depend on how much you're putting up as a deposit, the monthly term that you go for, your expected mileage that you put in. Obviously that doesn't apply for hire purchase. And finally, the dealer or broker that you're getting the car from and their own respective deals. You may find that the same car is being sold by different dealerships, and those different dealerships offer different finance deals on that same car. So you can be surprised, even from the same dealer, they'll change up their deals. You'll be surprised in differences in costs that you can get just from going for a different dealer. When you do finally set on a car, I'd say try get multiple quotes, at least on 2 finance products. So hopefully you've decided to, of those 3, you can, take one out. For example, if you definitely want to own equity in the car, leasing's not for you. So I've done a quote example for you, got PCP and leasing, and I've done this on a Tesla Model 3. Now, it's not about the car, this is purely about having an equal foot example to show you, because I mentioned if I showed you PCP and leasing by different dealerships, it's just going to get totally messy. So just by having the same car on the same website, using the same calculator and the different finance products, I can give you a direct comparison of each product. Now ignore the monthly payments because we're not talking about the car here or affordability. We're literally just looking at comparisons and the difference between the 2, PCP and leasing. So these costings that I've done are without any processing fees. You want to take note of that because generally it's like a hidden cost that they charge you an admin fee of £150, for example. So you might need to take that into account as well when you actually come to purchase the car. So in this case, £532 a month for leasing, times by the term of 48 months gives you £25,536 in total that you'll pay across the whole period. Now I've done £4,000 deposit for both of these just to keep it as equal as possible. So in total from PCP, you'll pay £29,536 from deposits and monthly repayments, all at an interest rate of 4.90%. So interest is included in that. And your balloon payment or optional payment that you can pay at the end if you want to secure the car at the end is £16,091. So that is the optional payment that you've agreed to at the end. If you want to go ahead with that, obviously you don't have to, you can hand the car back or you can part exec it. If it's worth over 16,000, whatever it's worth over it is yours to use against the deposit for another new car. Now if we go ahead to leasing, we can see here that the monthly repayments are cheaper. It's £418, so over a 48-month period that you're actually paying £20,064. At the same £4,000 deposit, you're paying in total £24,064. And that's the total of the lease as well as the total of the deposit as well as the monthly repayments. So you've got like roughly £5,500 different between PCP and leasing. So just looking at them figures, it's whether you go down the route of, do you prefer having equity in the car and hope to make a good gain in that? Or would you rather do leasing, have the cheaper monthly repayments, and if you have the ability to save up to the PCP amount, as to what you would have been paying, so the full 532, could you save the difference there? And over that same period, we've mentioned there's a £5,500 difference. So you've got that safety net of exactly that's what you're going to have saved. There's no right answer here. It's your personal preference on what you prefer, but it's just another point for you to consider. So it wouldn't be fair if I didn't put an example for a hire purchase. So I've done the same £4,000. The only thing I have changed is the term because you're financing the whole car as opposed to part of it. So without the processing fees again, I've done it over 60 months, which is an extra year on top of what I've already showed you on the other 2 quotes. Even so, that's still more at £670 a month, but that's because you're financing the whole car. But you can see here that we're paying here £44,200 in total from the deposit and monthly repayments. Just here for illustration purposes, and if you want to have the car at the end, that's sort of roughly what you'd be looking at over a 60-month payment. But here it's interesting to see that you actually are paying a lower interest rate than what you did do for PCP. So which one is best? So there's no clear winner here, and it's all dependable on your own circumstances. And that's because one advantage might be an advantage for you, but it's also seen as a disadvantage to someone else. So it's all dependable on your own personal circumstances. But what I will say is think about your present situation. You know, what your finances in order, and finally think about what you want at the end of the term. Are you looking to just keep buying cars at the end of each term, or are you looking to secure it and keep that car running as far as possible until it's on its last legs, or wheels, as you would say? You get the joke. So that's all down to you, and you have to fit one of them to what your personal circumstances are. If you haven't done so already, subscribe, like, and share the video. I do have some other videos, in particular, if you do go for a car, I have a great one on car insurance and how to save money on that. Please make sure you look at that. And before you go, don't forget to subscribe. Thank you.